before I get started, I'd like to thank the U.S.-Mexico Foundation for putting together this event. On a personal note, for me, this is very relevant. I'm someone who was born and raised here in Mexico. We were just talking about this earlier. I'm born and raised in Mexico. I spent some of my teenager years in Saskatchewan, Canada. Anyone from Saskatchewan here? Yeah, I suspected that. And then I started my professional career and my family in the U.S. So this very much feels like a big, extensive home to me, this region. And I'm really delighted to see how the three countries of the region have matured to embrace the differences and push forward to create one of the most prosperous regions in the world. So that's what we're talking about here. We're going to be talking about North America as a block and the investment opportunities. By way of introduction, let me tell you a little bit about myself, and I'll turn it over to the very special guest that we have today. I'm a partner at QED Investors. For those of you who are not familiar with QED, we're a venture capital firm out of Washington, D.C., but we have a global presence. We're a fintech specialist, roughly $4.3 billion in assets under management. We have 220 companies in the portfolio. Two of these companies are represented today here in this panel, Bitso and Nuvocargo. We've got 29 unicorns, several exits with companies like Nubank, which was the first exit in Latin America. We've got Credit Karma, Avid Exchange, and a few others, Green Sky and a few others. So that's enough about me. But like I said, we're going to be talking about investing for success in North America's tomorrow. And I'm very, very delighted and honored to be joined by such a special panel here. Martin, Bárbara, Leti, Rubén, and Deepak, thank you very much for joining the panel today. I'd like to start by letting you introduce yourselves. If you can share something about yourselves, your organization, and the role your organization plays in the North American region, that'll be great. If you don't mind starting, Martin.
Sure, Fernando. Well, thank you for having me. I know I'm the CEO of Cabrera Capital Markets, Martin Cabrera. We are the largest Mexican-American investment bank in the United States. We have about 8 offices around the country and 1 in London. We've underwritten about $1.4 trillion in debt and equity IPOs. We also have an institutional trading desk where we're trading US, Latin America, Asia, and Europe, and a real estate development group. So we have an investment banking group that works with plenty of private equity firms, as well as pension funds from around the US. And we're happy to be here.
Excellent. Welcome. Bárbara?
Thank you, Fer, and thank you to the Foundation for the invitation. This is an amazing event. My name is Bárbara González Briseño. I'm the CEO for the Mexican operation of Bitso. Bitso is the largest financial services company powered by crypto in Latin America. We operate in Mexico, Brazil, Colombia, and Argentina, and we're trying to make crypto useful. And we're trying to disrupt many of the current financial services that already exist in our region, but like trying to make them more efficient, better priced, and more accessible for all the population. So, and we're a very proud QED portfolio company.
Thank you.
Hi, I'm Leticia Jáuregui. I'm the Global Head of Education Partnerships for Meta. I'm very excited to be at the North Capital Forum, not just because of the role that immersive learning and education can play in kind of the future of the region, but also because I'm a general partner in a VC fund that's a cross-border investment fund that invests in Latino founders in the US, as well as Latin American founders across the Americas. And we believe that the way we integrate talent across the region is essential to see kind of the capital market growth and the investment growth that we want to see. So very excited to be here.
My name is Deepak Chhugani. I'm the founder and CEO of Nuvocargo. Nuvocargo is a digital logistics platform that's helping streamline and modernize the way that cargo and freight moves between the US and Mexico and eventually all across North America. We've raised about $75 million from global investors, including QED. We really appreciate them inviting us. And all the work that we do is to try to streamline this very, let's say, painful and complex problem of moving cargo between the United States and Mexico with all the different stakeholders. And we seek to be kind of a vertically integrated solution where we can help you move the goods, finance them, insure them, customs, import, export, and we work with some of the biggest brands in both countries, and we get thankfully a front row seat into how a lot of brands are thinking about things like nearshoring, streamlining their supply chains, and we think it's a really exciting moment for North America, and we're excited to be here. So thank you for having us.
Hi, Rubén Coppel. Grupo Coppel, I oversee financial services. Grupo Coppel is a retailer, national. We have 1,700 stores and over 15 million customers, about 1 million customers that come into our stores every day for hard lines, soft lines, and financial services. We pay a lot of remittances from Canada and the US. About 25% of the remittances are paid by our stores. Remittances is 60 billion annually is what is paid here in Mexico. And with a simple math, it's about 6 million jobs every month that remittances create. So the region, why we like this panel as Grupo Coppel, or what this forum is, we support free trade, we support capital markets basically, and this is one of the best forums to invite everybody to see what we're doing and to see all the potential. I mean, North America has been trading for thousands of years. We're continuing to trade, and now with these forums, we do it more professionally. I do see a very bright future, and as a group, we're still investing. We're investing heavily in Mexico mostly.
Excellent.
And we're happy to be here. Thank you.
Welcome, and thank you all for joining. So now that we've introduced ourselves, I'd like to start with probably the elephant on the room, the question about capital markets, right? Like we're coming, Martin, from a 2020 and 2021 years, which were extremely plentiful. There were years of record numbers and number of IPOs of private companies going public. We ourselves had a couple of those IPOs, with the last one actually being Nubank in November of 2021. So 2020 and 2021 were extremely good years. I also recall one special statistic about the premiums that the valuations of private companies were commanding over the public companies. It was like 4 times what equivalent publicly traded companies were trading at. But now we're in a completely different context, right? Like inflation rates start going balloon in 2022. Our own exchange rate here in Mexico compared to the US start getting super strong. And this is all having obviously a number of different effects in the ecosystem. How are you, from your perspective of an American investment banking firm, thinking about capital markets, the flow of capital changing hands, and what are the opportunities that you see as we move forward?
No, well, Fernando, I think 2020 and 2021 were some very robust years. There were a lot of deals taking place, a lot of money kind of changing hands, and the valuations were very lofty. 22 came, and it just had a screeching halt for deals, for private equity firms, for IPOs as well. You're starting to see it thaw out a bit, where there's some IPOs kind of coming. They're smaller IPOs compared to some of the others in the previous years. And I think 2022 is one of the toughest years for private equity firms trying to raise funds as well. I think there's good news on top of some of the bad news, where I think the market is starting to thaw. There's still a lot of dry powder out there. I think in the United States, it's roughly about 800 to 900 billion that is still kind of out there in dry powder looking for deals to invest in. And we try to focus on some of those areas where there's niche opportunities, and even looking at this huge US Latino demographic that's booming. Mm-hmm. And that's where you see a lot of kind of some of the bigger investors that some of our PE firms would tell us, like, we don't want to look at anything under $2 billion. And 22 hits, and then they change their tone. It's like, okay, hey, we want to look at that $600 million deal or a $300 million deal, because they all have to put that money to work as well. And if they're not putting the money to work, the pension funds they got the money from is going to put pressure on them and even kind of pull some of those assets. So I think the valuations are starting to improve a bit, and there's going to be deals that are kind of coming to market, a lot more deal flow as well that we're starting to see, and even for our PE firms that they want to see all of those deals. So I think they are opening up, their parameters and their criteria to look at different deals. But I think there's also, even here, you take, one great example is Talapot Holdings, who's here. I think Rodrigo Garcia is a global CFO. They're starting to see deals where there's great opportunities as well. So the valuations have come down, but that's great for those investors. And then also for those companies that are looking for capital, to take some of that capital, and maybe it wasn't at the valuations it was kind of 2 or 3 years ago, but it does allow them to grow their firms and to go out there and scale their businesses, and then looking at Canada, US, and Mexico as well, and tapping into some of those other resources where they're going to be able to increase kind of their market share and their client base as well. So I think it's still exciting times. We're seeing kind of record number of clients kind of coming into us that we can kind of help with their capital raises for growth capital to grow their businesses that are in the States, but also are doing business not just in Mexico and Canada, but also in Europe and Asia.
Super interesting. So it sounds a lot like a cycle, right? A cycle where there's a regression to the mean. Basically, we're now going back to valuations pre 2020 and those days. Is that a fair conclusion?
I think so, and I think a big component is that the public pension funds, which is a big component of the United States, they are looking to invest more into alternatives, private equity, and some are opening up a lot more to venture capital as well. So they're moving some of their equity dollars as well as fixed income dollars into alternatives. So there, that 800 to 900 billion is probably going to continue to increase. So there'll be more capital available to get the better returns that they're seeing in the equity capital markets or debt capital markets. So I think there's a positive outlook that with that growth, you're going to see that expand, and that there's going to be a lot more dollars to be invested as well.
So you would therefore conclude that there's really no risk about innovation. Those dollars are waiting there to be deployed, and they're waiting to be deployed in assets that are alternative, that have some risk associated to it, not necessarily kind of risk-free type assets. And that's the type of capital that flows into innovative companies that are disrupting and doing things different in the region.
I think there's always risk in investing, but if those platforms are, and you're seeing a lot more kind of AI-related companies that are able to raise some of those funds for their companies, but that technology and being able to weather some of the storm, even for a pandemic, we saw technologies do even better during that time. So the investors are looking at the environment, whether we go into a soft kind of landing or a recession, who are going to be the companies that are still going to be resilient, where they're going to be more, it's not a commodity type of company, but more a necessity. And those tech companies are being innovative, are going to be able to attract some of those dollars for investments as well.
And maybe that's one of the reasons why the ARM IPO, so the semiconductor giant IPO, was a $5 billion IPO. It was one of the largest tech IPOs in the last 20 years. So to your point, those companies that are building tech that is going to be resilient, that is going to be sticky, are going to see higher valuations, are going to see appetite, adoption, et cetera, and then maybe others are going to be lagging.
Yes, very much so.
I would say, if I can add one thing, it feels like from the startup perspective, I don't know, I think Bárbara can probably corroborate this as well. What we see in the ecosystem of growth stage startups, especially in North America or Latin America, you still have this really big mismatch between the valuations that investors are willing to pay and what founders or companies are willing to accept. And so I'm hearing a lot of stories every week of painful rounds, down round structures for a lot of growth capital. And I think that the investors who put a lot of dollars to work in the region of those types of companies, they're getting burned by seeing those outcomes as well. And I think they've told us they're struggling to raise their next fund. So I think if you raise new funds and an investor, there's going to be better valuations, but there's also a little bit of a bittersweet feeling towards investing in the region, unless it's something purely AI related, because there's some baggage of all these very high valuations that were paid in the past few years as well. So I think that's a slight headwind, but in general, there's a lot of tailwinds for investing in the region because there's so much dry powder, right? And so many areas to innovate.
And I think for some of those companies 2 years ago, they were being told, hey, you're valued at 1.4 billion. And now they're valued at 450 million. So it's still hard for them to digest that amount. They're like, I want that $1.4 billion valuation. It's like, well, it's not there, and it's probably not going to get there anytime soon. So they've got to make decisions whether they want to accept the valuations of what the current market environment is, or to just kind of go on their own.
And
Yeah.
they really don't have an option. but
It's
it's
the
hard,
market
it's hard to
dictating
accept.
terms.
Some of them do have an option, right? Not like I think if we think about the past 2 years, like yes, there's many. We're still having to deal with some of the effects of those like mismatches in valuation, probably an hyper excitement for the region. But the reality is that 2021 brought a lot of capital into the VC world in Latin America. It put Latin America in the map. It put the startups and entrepreneurs in the map. And I think that it created a virtuous cycle where there was more projects that were starting to grow and people that were starting to try to take a risk and trying to solve many problems. And I think 2022 was a huge learning period for the majority of startups because like as valuations adjusted, as they're more strapped for capital, as they cannot raise money, like I think they've needed to go back to fundamentals. But I think that today, like there's still the dry powder, even if it's hard, but I think like investors still have to allocate that capital. And I think the companies that are going to be benefited from that is going to be the companies that have the most strong fundamentals and the ones that have done the right the right recovering from 2021 into today, like placing attention in what matters most for those investors.
Yeah, I'm definitely a believer that more innovation and better companies, better operators, better founders are going to come out of this whole turmoil. And it sounds like you're starting to see signs of this valley starting to come up.
We're hoping the J curve is starting to go upwards, and that hockey stick is.
And I hope it's a hockey stick and not an S curve, right? Like where we start floundering at the bottom. Very good, very good. I'd love to switch gears a little bit here to FX. But before that, if anyone here has questions, just know that there's an app where you can ask the questions. We'll try to leave a few minutes. We have too many questions here, but feel free to ask a question and we'll try to get to them. So the next question, and Rubén, I'm gonna direct this one to you, if you don't mind, but anyone feel free to chime in. So for those of us who are here in Mexico, we've seen the Mexican peso get super strong over the last 12 months. There are winners and there are losers, right? Like to this phenomena. From your vantage point, what is causing the strong peso? Is it sustainable? Who's winning? Who's losing? And I guess more importantly, and this kind of goes down to the mass market in Mexico, you know, what happens with those families who depend? You were just alluding to 60 million families or people that depend on remittances, and now those dollars are worth much less. How are you thinking about the impact of the strong peso and FX volatility?
So I'd be happy to talk about the impact. Understanding the movement is much harder, and you need another economist panel to figure that one out. But yes, of course, it's driven by central banks and what central banks are doing. But the impact, so even though the peso is very strong today, remittances went up 10% in dollars. So it's a huge number that talks about the strength of the U.S. and Canadian economies, where they have good employment, good solid employment, because they have enough to live well and send a little money to their families abroad. So that's great. And those, I don't know if that 6 million jobs equivalent is right, but we can do the math there. And in consumer goods, and I'm going to switch from tech to consumer goods, we have seen in many categories in our stores of hard lines and soft lines deflation. This is obviously because of strong peso. We're able to buy more at a lesser price. And also ocean freights. They've come down significantly over the last year, mostly, or last 2 years. If you think about how does that impact, well, there are certain products that up to 50% of the price or the cost was freight. Imagine a container, how many sofas can you fit in there? that number came up to about 50% of the cost was freight. Today, I think the most is 10, 15%. So that's a huge improvement, which helps a lot for the market, helps inflation. The other thing I'd like to mention is in the Afore, in the investments that we do for our customers. Well, this is an opportunity to invest abroad at a better price and get better, more stocks for less pesos, basically. And in the long term, it should be a great investment for all of our Afore affiliates. Our average age is 36 years old, so we have to, of the affiliate. So we have 30 more years until we have to pay out most of our pensioners or their retirement funds. So we have to think in the very long term. So we're very positive. We know that it's going to come up, come down. Everything's going to go on in the next 30 years, as it has in the last 30 years. And we just have to figure out, be very patient, and not get overexcited about what's going on in the news every day.
Prepare for the worst and hope for the best in the long term.
Well, plan for the best.
Plan for the best.
Yeah, we're here for the long term.
Very good. And Barbara, I think this, especially the FX piece, touches a lot on crypto and the role of technology as a channel, as a toll road to create efficiencies. How are you thinking about FX from a Bitso perspective?
Yeah, for us, it's more about like the infrastructure to provide aid to the FX corridors and the cross-border payments in the region and with the U.S. If we think about how we interact today as human beings, all of our interactions are cross-border, are global, are immediate. We're texting a picture, texting a message story, sending a picture, or even like giving services out to like for freelancers or entrepreneurs, are giving services probably to someone who's in a different country. However, the money doesn't move in the same way. Mm-hmm. We still have very financial system that's lagging that innovation. And we see some countries where financial systems have evolved and they're more technological, more innovative within the confines of their borders. But when you talk about like cross-border interactions between financial systems, it's still very archaic. So what we're trying to do from the Bitso perspective with crypto is trying to connect the dots between the different jurisdictions and creating really a global payment system. So talking about remittances, we've been investing heavily on the remittance corridor between the US and Mexico for the last few years. Like Rubén said, it's a 60 billion USD corridor in a single year, and we've been able to do 3.3 of that corridor. So we're very proud because like I think that we're making a dent there in a very short time because it's way more efficient. Like I think that when you use technology, and the same is going to happen with AI, the same is going to happen with other like up and coming technology that are here to facilitate the way that we interact with in our daily lives. Like it really becomes like it's way cheaper, it's immediate, it's from the comfort of your own home. And I think that we see industries like the remittance industry where the MSBs have not changed their business model for like decades, where it's very easy to bring some of these innovation that you were talking about and try to provide better services and products to the population. So I think that's what we're trying to do. And we're seeing it not only between the US and Mexico, but we're also seeing it between like other countries in Latin America, between Brazil, Colombia, Argentina, countries where it's particularly challenging to either get money into the country or get money out of the country. Each country has its own particularities, but we've seen that time and time again. So we're trying to use technology to create a better connection of the financial realities of people.
And we see the impact in our customers when they collect their remittances. I think over 10% today of remittances are digitally originated. Is that the right word to say? Mm-hmm. They don't have to go to a small store to their store and give the cash out. So it's just all digital all the way here. And we're also pushing, because just sending the remittances is hard, but then getting the cash out in this side of the world and actually using it is harder. Having a bank being open Monday through Sunday, in store hours, it gives us an advantage but we are pushing the customers to have the remittance directly to their card. So it's from digital to, we'll call it digital, for a debit card. So that's helping a lot, and it's making it easier for both sides to live in that world and to have access to that money.
Yeah, I mean, I have to admit that a big part of the thesis under which we invested in Bitso back in the day, and we talk about this for several years, is because the amount of friction there is simply in the traditional financial system to move money from one place, one country to another. And I think technology plays a big role in removing a lot of that friction. Crypto already has sort of the technology to do it. But there was also a lot of hype and a lot of speculation on many aspects of crypto, which have hampered crypto as an industry. But the fundamentals remain. I would say, though, that all that hype has also created an adverse regulatory context for crypto. How are you guys thinking about it to kind of rescue what's very valuable about crypto as a technology and being able to coexist with sort of a bit more adverse regulatory environment?
Yeah, excellent question. So let me take a step back. I think with any nascent technology, it's very natural that there's some fear, some lack of information. It's hard for people to get on board. I love telling the story of, if we go back to the early 90s or late 80s, like, people were very afraid of the internet and they didn't want to jump in like right away into like using it for their daily lives. And today we basically operate 100% of the time connected to the internet. So I think like that usually happens with nascent technologies. And if we think about crypto is a 15-year-old technology. It's an adolescent. So it's still in the development phase where it has its ups and downs. But you say very well, Fer, where like the core of the value of the technology is how do we create this infrastructure that really enhances a lot of what we already have today, but it's just like it's not current or it's not optimal for the end customer on a day-to-day. From a Bitso perspective, we've always realized that regulation, if we really want to have a scalable product, we have to keep close to regulation. And like our number one employee was a compliance officer. We've always played very tight relationship with all the different authorities in the countries where we operate. We have an end-to-end regulated platform, both on the crypto and the fiat side. And it has been a challenging process, like I will not lie, because particularly most of the time, the technology is way ahead of where the regulator is. So we need to do like a lot of education efforts to try to bring them in, to understand what are the right frameworks that can help create a regulation that's pro the customer and that actually protects the customer. Because that's what you want with regulation, right? You want the benefit to translate into the end customer. And I think like this past year was it was like a pivotal moment for crypto, because what we saw in the US was because of the faults of fraudulent behavior that had nothing to do with the technology. It was more about the character of the people operating the frauds. I think regulators became very strict in the US about how they wanted to handle the technology. And that definitely has spillover effects in the rest of the world. However, I think that I can tell you today with almost 12 months of hindsight that I was more afraid that the spillover would be negative. And I think that what we've seen is that other jurisdictions have reacted more positively to the US regulators' attitudes toward the technology, and like other countries have had more forward-thinking structures on how to coincide with this technology and how they wanted to coincide with their financial system. And we see progress, right? Like we see Brazil has done a lot of progress in matters of regulation. Colombia is also pushing. We see countries in Europe that are actually pushing for stronger regulatory frameworks that can actually help incorporate the technology to their system. So it's an ongoing challenge, and it will continue for many years.
And if I can just add something, I think we think a lot about regulation and kind of a governance in the context of AI. But I think in general, when we think about technology and regulation, we should focus on the what and not the how. Because then if you have an outcomes-based approach to regulation, you can future-proof AI, or you can future-proof blockchain and crypto, because they are techs that are advancing so fast that if we focus on the tech itself with the regulation, we miss the impact on the consumer, we miss the impact on the clients, et cetera. So I think there's a commonality there in terms of the speed of technology versus the speed of regulation and what we focus on.
Yeah, and ironically, it's a similar type of dynamic with AI, Leti, and I think we'll get into that in a little bit, but very, very insightful, thank you. So we have a couple more topics, so we're gonna keep switching topics on major trends for investment in North America. The next one is around nearshoring. It's almost impossible to read the news and not read something about nearshoring, especially here. It's a major phenomenon in the region. And I think very few companies like Nuvocargo have been as close to this trend. So Deepak, I'd love to get your take on what is causing nearshoring, how is this phenomena evolving, is this here to stay? What are sort of the fundamentals, and how much of this is hype?
Yeah, so similar to Rubén's answer, I'm definitely not an economist, so take everything I say with a grain of salt, but I will say that Nuvocargo is just uniquely in the middle of US-Mexico trade. So I thought a lot about how to comment on this thoughtfully when Fer asked me, and I would divide it into three buckets. The first one is, I think sometimes people are talking about nearshoring as if North America trade is small and growing, but the reason I started the company 4.5 years ago is because it's already very, very large. So I'll start with, it's already a huge industry, huge market, North American trade, and specifically US-Mexico. The second is this trend of nearshoring and some of the things we see that are causing it to really increase, and why we think it's a secular long-term trend that's really exciting for the region. And the third is what we can do to capitalize on it, because a lot of the conferences I've attended or the things we read as a team, they end up being about, it's an opportunity that we could miss the boat if we don't really invest in the different pieces of infrastructure as different governments, as companies, the private sector, the public sector. So I'll try, and Fed, let me know if I'm covering what you want. So the first one, just size. We're always shocked when we meet large investors who were surprised to learn that US-Mexico is already basically today the world's biggest inter-country trade lane. There's 9 million truckloads crossing the border every single year. There's anywhere from $600 to $800 billion worth of goods moving between both countries, and both economies are highly interdependent. So it was already very large, and very recently, every metric is starting to surpass US-China trade, for example. So US-Mexico is really thriving, and about 80% of all of that trade happens over the road, and that's why we started focused on US-Mexico trucking, because it's such a complex industry and a complex flow of goods that we believe can be streamlined with software, and now obviously with automation through the advent of AI and other advances, right? So it's already very, very large, and I think both economies of the US and Mexico rely on each other and are increasingly relying on each other, right? Yep. So that's the first bucket. The second one, nearshoring as a trend. To Fernando's point, the way we describe it is nearshoring in general is just this process of supply chains coming closer to home. And the reason for that is proximity. You might have a simpler and easier supply chain nearby. There's obviously been other things that I'm not qualified to comment on, such as geopolitical tensions, but basically as a fact, our brands tell us, hey, Rubén mentioned that ocean freight costs skyrocketed in the pandemic, and it just showed that supply chains in North America with China are not as resilient when things get out of whack. So having supply chains closer to home is attractive if you can make it work. And that's a big if, because there's a lot of goods that you still need to make in China or in Asia or South Asia because of the expertise that you have locally. So that has prompted a huge move towards Latin America, and I would say Mexico. I'm going to read this because I don't want to butcher the stats. Basically, we have seen as a team at Nuvocargo, we were able to investigate just this year, there's about $42 billion attributed to new nearshoring investments. That's already 40% higher than all of 2022 last year, to give you an idea of how fast that's growing. About 36% of the investment is net new companies, so they had nothing in the region. And Mexico expects to welcome at least 495 new companies between 2024 and 2025. So there's so many new projects. You read about Tesla, the Gigafactory. You read about new companies all over China and the US that are trying to bring supply chains closer to home. So the trend is very real and very exciting. And that's a transition to the third bucket, which is how do we capitalize on that? And that's a lot of what we're focused on at Nuvocargo is you need to get better at modernizing supply chains. You need to get better at bringing skills and labor for those goods that today can only really be made in Asia. And you need that expertise. And then we need to have really smooth collaboration between all the governments. So we are always up to date on what the US and Mexican governments are doing to make that border more streamlined, more more safe, because there's a lot of insecurity issues near the border. And so I think that if we all focus to be more proactive as a group or in this conference of what we can do to capitalize on the opportunity because it's already happening, I think that's where the most productive energy can be spent. And there's a lot to do there, right? With technology, with regulation, the public sector, the private sector. I hope that's helpful.
Go ahead, Rubén.
I'm just adding, and we were talking about nearshoring in our industries, which is consumer goods, and it's coming, but it's taking some time. We don't see it today. I mean, our suppliers are still delivering the goods in Asia or bringing them from Asia here, but our products and services are very complex. If you think about the products and services in a department store, they have many components. So each of those components needs to relocate to North America and then assemble it in order to deliver it. So it's taking some time. We're seeing they're slowly coming, but they're definitely coming.
And I do think it's sustainable, Fer. I think you asked that question. I didn't address it because there's a lot of secular trends where we want to bring things, make supply chains more nimble, especially as consumers expect two-day delivery. They want their inventory to be spread out closer to customers. So I think it's here to stay, but the limiting factor is going to be, I think, what Rubén says, which is you just can't make a lot of these goods or have that high-skilled quality yet, right? In this part of the world, like the way iPhones are made, it's not cost, it's about tooling and precision. That's an example that a lot of us would understand. There's countless examples like that, including some Rubén was giving us before the panel, right?
A very specific example, if I remember.
A very specific, complex manufacturing example.
Yeah, I mean, so the reason I was asking about sustainability is I suppose many of us here in this room are wondering about where are the investment opportunities in this whole nearshoring phenomenon, right? And I mean, you have to believe that one, there is demand, right, for nearshoring, and nearshoring is mostly a function of the largest economy in the world, the U.S. demanding goods. So you would say, yeah, there is demand, but you also need talent, you need infrastructure, you need technology. Where are those kind of voids? Where are those gaps that require improvement? Clearly, you have technology as one of those, but
yeah, I think there's many, and that's what is exciting. So I was at a conference GBM put together in New York recently, and they were talking about nearshoring, and there was a lot of you could see that there's like a need for jobs and skilling of talent in Mexican factories. That's a very tangible one, and it's not just any jobs, right? I think we need to come together and understand what are the biggest sectors that are moving closer to Mexico, for example, and what's the skills gap? How can we train more talent that can actually help in those factories? There's also a lot of automation that's going to come to those factories. So there's a huge, in my opinion, a huge opportunity for investment of the machinery that's going to be created to automate pieces of that supply chain that you just need a precision that humans maybe just can't consistently give for complex things. And then in our view, we think, and you're seeing this with the crisis of the border and what people are talking about, but from Nuvocargo's perspective, just the process of moving one truckload of goods from Mexico to the US, you have 15 stakeholders, you have two currencies, you have all this complexity, you have so many different parties exchanging information. That's what we're focused on, is automating a lot of those workflows, because that can create huge productivity gains and make more seamless the process of moving goods, so that when there is that demand, we're not bottlenecked by the supply chain, which is kind of what happened with China in the pandemic, right? Like you can see how the supply chain can become a huge bottleneck, which means you get less goods, but then not only that, the goods you bring in, the cost skyrockets,
right? Because
the supply chains just can't. So I think supply chain resiliency, job skilling for those new sectors that are coming, and then just general partnerships, public-private sector, to make trade easier And then obviously artificial intelligence. I don't like to talk about AI just as a trend. I think it's applied to solving problems to customers or applied to creating efficiency. I think that's where there's a lot of opportunity, right?
Yeah, for sure. And I mean, one of the points that we've been researching around the nearshoring phenomena is that some of this is a shift from production in China. And one of the motivations for kind of shifting production from China over to Mexico is an increase in labor prices in China, which is also a function, I mean, we're not economists in this panel, but it's also a function of increased demand, right? Like there's more and more demand. Is that what's going to happen to Mexico now with the increased demand
Yeah, I mean, I don't know. Like I said, I'm not an economist. I can tell you what we see. We don't know what's causing the peso appreciation, but if any of that is the increased demand for the U.S., and then there's just a lot of jobs that are being created in Mexico related to that demand, to service that demand. So it's like any supply and demand market, right? If there's not enough talent, the price is going to go up, so the cost of that labor is going to go up, if it's not already, right, with the appreciation of the peso. I still think that as long as you can be in a competitive range, I think it's going to be a mix of balancing labor costs, but then it's going to be about, do you have the skills to actually produce some of those big chunks of the supply chain closer to Mexico? And if you do, it's in everyone's best interest in North America. One other stat that really shocked me, and we like to share, is every good that's sold in the US that's made in Mexico, on average, 40% of that, or 40 cents of that dollar, contributes to the US economy, sorry, right? Because there's so many back and forth in the supply chain, and it's about a tenth of that with China. In the auto supply chain, it's such a complex supply chain, to Ruben's point. You could go back and forth 8 times just to get one automotive supply chain done. So I think just creating that flow in a seamless way is going to be really challenging. And I think cost is a part of it, but I really think a lot of it is going to come down to this supply chain has this one really specific thing that you can only get done in South Asia. Can we bring that home? If not, we have to keep relying on that side of the world, right?
Fascinating. That's fascinating. It's so cool to be in the middle of all of this, and so proud that you guys are tackling some of these challenges.
Yeah.
And I mean, to that last point, I think all of you know that I'm a huge believer in technology. I've always been in AI, and I think one of the roles of AI is going to be around creating those efficiencies, right? Because it's going to be empowering. I'm actually the CEO of Koru, which is a company that builds conversational AI for businesses. And the role of AI here is not to replace humans, it's to make humans way more productive, way more precise, more capable of doing their jobs. And when you talk about the challenges, especially nearshoring, around how to empower that labor to yield better productivity and not increase cost, because if you start increasing costs, you start becoming less competitive. You start passing on that cost to the consumer, and you don't want that, right?
Exactly.
So I think a lot of the challenges are around AI, right, and technology in general. So on that front, very few companies in the world know more about AI than Meta. Leti, tell us, how is AI truly changing the world? How are you guys thinking about it? Do we need to be scared about it? Or do we need to embrace it?
Thank you, Fer. And 2 disclosures, I don't know that I'll be able to talk about the whole word and that impact. And I am an economist, but don't hold that against me.
I should have said I'm an economist.
There is one on stage. But I think, good. So since the earliest days of Newsfeed at Meta in 2006, we've been using machine learning and AI to really improve our customer experience. And it's powered all of our apps and services, from feed ranking, community discovery, personalized ads, etc. So really AI has been impacting and has been foundational to our family of apps for a very long time. And today in North America, there's almost 480 million monthly active users that are benefiting from that kind of AI that is embedded into the products. And I think to one of the points that were made, AI has been around for a very long time and is transversal to most of the companies that are sitting here, most of the transactions that happen in our day-to-day lives, and we don't even kind of realize it. And what we're seeing now is a new wave of excitement around generative AI. And I believe AI is going to be a transformative technology, has already been transformative for a lot of sectors, and will continue to disrupt essentially everything. And I think it's going to be central not only for technology, but to address global challenges around climate change. It's going to revolutionize healthcare. It is revolutionizing education, which is most of what I do within Meta, agriculture, and so many other sectors. I'll speak specifically first about education, then I'll give a few other examples that I think are exciting in different sectors, and then I'll close talking about some of the risks, right? Because I am very bullish and optimistic about the technology, but as any technology, if used correctly, responsibly, with privacy and safety in mind, it can be hugely impactful. But if not, it can have a lot of very negative effects.
Absolutely.
And we need to be very careful about that. We need to do a lot of research. There's so many more questions than answers at this point that we still need to look into. And specifically in the case of education, I think we're seeing a lot of excitement around AI and generative AI, and it can impact, for example, automated instructional design. So it can help educators think about curricula. It can help trainers in vocational training settings or in companies think about how they can design their learning content, how they can train employees, how they develop plans to improve engagement, outcomes, retention, et cetera. So that area we think is hugely impactful. A second big area are automated virtual tutors or companions. Khan Academy is a huge education player, and they launched Canmigo, for example, where they really want someone to accompany your learning journey, an assistant that you can ask any question to, where you can learn as you go. And then third, I think something very exciting is around continuous and adaptive learning. And there's apps like Alex, for example, that's a platform that students and parents that educators and parents can use to understand a specific student's evolution in learning. And that can be applied in professional settings. So by 2027, 60% of all employees globally are gonna need to be reskilled because of the advances in technology. How can we do that effectively if we don't leverage tools like automation, if we don't embed that type of training and learning in their day-to-day activities, and it becomes something that is adaptive and that is evolving with them? And in that sense, I think education for me is one of the most exciting places where AI is going to have huge impacts. And if we think about immersive technologies, so augmented reality, virtual reality, and mixed reality, the intersection with AI is essential for this to become a reality. We can think about how automated 3D asset creation is going to enable any educator to now create digital virtual environments to teach. It's going to enable companies in manufacturing to think about how they train their employees better. Standard operating procedures can be automated very effectively. And even before you hire an employee, they can get trained in a real scenario about how they're going to be working in that car manufacturing plant, for example. You mentioned Koru, that is essentially a core AI user, but there's companies like Aleph in Mexico that is using AI in logistics and helping companies automate their routes in real time based on security events, which is a key kind of for that North American integration for nearshoring. There's companies like Yalo that are using WhatsApp for conversational analytics and sales. If we think about safety, so dangerous activities like monitoring industrial processes or leaks, if we think about mine deactivation, AI is going to be essential in how we can automate some of these tasks and take them away from people who are in very dangerous positions when they're doing that type of work. There's a huge trend now in fashion with AI wearables. So if you've seen anything around Paris Fashion Week, aside from the bed bugs, it's AI wearables and this kind of interest in how AI can intersect with fashion. Gartner is estimating that by 2025, generative AI will produce 20% of all consumer-facing data. That means that any of us who've dreamt of being artists can become artists using generative AI. Meta has an ESM fold model that's enabling detailed cataloging of protein structures. And this is a very scientific type of model, but it's focused on how we can develop new solutions for curing diseases, how we can produce clean energy, amongst other solutions of how we can use this. So I really think AI can have incredible benefits. But to the risks, obviously there's a huge risk around misinformation and a lot of AI transparency issues. If you use any AI assistants today, whether it's Meta AI, ChatGPT, et cetera, you will see a lot of disclaimers that there may be mistakes, that there's incomplete information, that there may be made up examples. So
Hallucinations.
there's hallucinations. So there's a lot of transparency issues. Then security and integrity obviously are essential, and that includes threats to national security and democracy, and that is something that is, again, core to this North American integration, and that is gonna be, I think, a rising trend as we think about the elections in Mexico and the US next year and globally. Bias, including political bias, but also bias in the models themselves,
Right.
and how that then leads to biased answers is essential. Data sets that include content provenance and copyright issues, and finally, labor and environmental impacts, I think, are essential. And this is all of these areas are things that are embedded into our responsible tech innovation principles and how we're building AI. But again, I think there are so many questions that are yet to be answered. And it really requires everyone to contribute to this. And in honor of Pati Hinich, who's back there, I think to make a cooking analogy, I think this is one instance where we have the right ingredients, right. But we need as many cooks in the kitchen as we can get. Because if we don't kind of come together and cook it together, it's gonna be very hard for the region to leverage its advantage, and it's gonna be very hard for the technology to benefit everyone and to be equitable and accessible.
Right. And if we do it right, the benefits outweigh the risk, right? Like, and we will learn how to manage them properly. And on that topic of having as many kitchens or as many cooks in the kitchen, how are the rest of the cooks here embracing technology, embracing AI? I know, Deepak, you mentioned already using AI. Rubén, I don't know if you want to talk about the topic. These are technologies that are moving really fast, and large organizations are often challenged by the speed at which this technology changes. How are you guys thinking about it? Deepak, Rubén?
Yeah, I'll try to be brief because I spoke a lot already. But basically, my team has been educating me, especially the more technical folks that come from pure technology companies. And the biggest thing we see is there's just a lot of hype around AI and how you can actually apply it. In our case, logistics is an industry, especially international logistics, where there's all these, every shipment, if you think about it, is kind of a relay race of information. I need to find a broker who'll find me the truck in Mexico, who gets it to the border. Then there's 4 companies at the border. So you're just exchanging information to make sure that the goods get from step 1 to 2 to 5 to Z, right, till the end. And where we see the biggest opportunity for AI is, first, you need to have structured data on what happens in that entire experience, and that's really the hardest part, and that's the biggest lift of what Nuvocargo has done, is we've created a system that both for the communications and the shipment data can be structured, so then you can study all the different workflows and then apply AI to that, whether it's customer communications, which is more like conversational AI, if you will,
Yep.
Or just internal workflows where, hey, this happened at the border, or it's red light at customs. What business actions does that trigger internally, and how quickly can you get that information? So I think it's a lot of that as the core innovations of our business. And then obviously all the other vendors that we get pitched on, they seem to be applying AI to different parts of the tools we already use. And those things are making every part of our business a little bit more efficient every day. And if you think about exponential growth, it will really compound. You can do things with a 20-person company that you needed maybe 100 people or 80 people or 200 people just a few years ago. So we're very excited, and that's how we're thinking about it.
The retail side and the investment side. And the retail side, it's been around AI in one form or another. It's just now much better and cooler. But we've been trying to apply it for logistics, for inventory management, for also chat, and risk management, et cetera. So we're trying to apply it in every part of the company, and think that the challenge here is who's going to apply it the fastest and the better, and who's going to get those efficiencies. And the investment side, we were at a Goldman Sachs event, and they calculate that I think retail was about 20 to 30% more efficient it's going to become if they're able to apply it. Obviously, there are other industries where there's not that much to become more efficient in production and everything. But there's a lot to do. I mean, there's a lot of potential, a lot of investment that we have to do. And the hard part is, it's not figuring out how to apply it, it's changing the whole processes and the whole mindset of everybody to actually use it in their everyday lives and to just make your own life easier.
which is proportionally difficult to the size of the organization, right? So the bigger the organization, the harder it is to adopt these type of technologies. And you guys obviously have the luxury of having a fantastic, very large organization, but that also means harder to adopt technologies. But yeah, this is a topic that is very dear to my heart, and I hear it in every single board meeting. Everybody's trying to figure out like what can they do with AI, and I agree with you that if we embrace it the right way, it's going to be much more benefit than risk. So we are unfortunately out of time here, but I want to thank all of you for a great participation. A round of applause. We have 2 minutes. If anyone has a question here in the room, I don't know if there are any questions on the app. I think there's a question back there.
I do have a question about the amazing metaphor of the too many cooks in the kitchen, which typically is a negative connotation, right? Like too many cooks in the kitchen, just complicated. But it sounds like this is one where it's the opposite. And I wanted to ask about all the other cooks in the kitchen that have to do with AI. Is there collaboration? Like, what's that relationship?
I think it's a very good question, and I use the analogy on purpose because I think it serves two purposes for what we're talking about at the forum. One, I think in terms of nearshoring, we need all the cooks in the kitchen, meaning we need the US, we need Canada, we need Mexico, we need all the different industries, we need private sector and public sector collaborating with civil society, et cetera. So I think in that sense, we do need all cooks in the kitchen. I think in terms of AI, Deepak was talking about structured models, right? And what we're seeing is with generative AI, there's an option to now have unstructured models that get structured through artificial intelligence itself, but you start to see integration of many different solutions to get to the point where you want to get to. And so if we want 20% efficiencies in retail, it's not going to be up to just a chat or just logistics. It's gonna really need solutions from many different providers and many different perspectives to come together to solve one single issue. And so for me, that is exciting because it means that there's gonna be a lot of opportunity and white space for new business creation. If we think specifically about generative AI, I think there's a very hard data moat if we think about large language models. So we're seeing a lot of really great use cases around vertical uses of generative AI. But again, I think we're just starting to see the infancy of everything that's going to happen. And the more people get involved, the more people can get educated about the technology, can start to use it in their day-to-day lives. Everyone can use ChatGPT to ask a question. You can use the new AIs from Meta to, if you like Dungeons and Dragons, Snoop Dogg can be your dungeon master. So I think there's fun ways, easy ways, complicated ways, and very sophisticated ways of engaging with the technology. That means that as long as we all start to use it, then we'll see more positive benefits. The more we are weary and the less questions we ask and the less research we do, I think the higher the risk of the technology being used negatively.
Very good. So we ran out of time. Yeah, I'm being reminded that we don't have any more time. We're going to be around, so if you have any more questions, I know there's a long list of questions here that we couldn't really get to, but we'll be around and happy to talk to any of you. Again, thank you so much for being part of this great panel.